Good morning or good day. Welcome to our global webinar series, Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, so let's have a nice start like every day. And today it's Tuesday, 30th of October 2018. Welcome to Admiral Markets. We will start like every day with our disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. If you're a starter of Forex and CFD trading, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find the long version displayed on our web pages. If you are in the European Union, you can also find information on admiralmarkets.com about different offers and options for retail clients and professional clients. Sometimes a picture shows more than 1,000 words. In the European Union, DAX 30 and Eurodollar, 2 prominent examples. The margin requirements is quite different for retail clients and professional clients. If you are a professional trader, you can apply for the professional client status on our webpage, and here you see the specific link. You will find all details about that. Retail clients will have the benefit of an unlimited protection against negative balances. Professional clients not, but some brokers, and of course Admiral Markets too, offers an additional protection. We call it negative balance protection policy. Here also professional clients get a protection up to 50,000 British pounds, what is around about 70,000 euro. Check it out on admiralmarkets.com, for example. This is me. My name is Jens. My English made in Germany, so we are a big international Forex and CFD broker. We have over 18 country offices, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. Like today, on Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. On Thursday, it's Marco's day. And on Friday, it's DX day. Our leading day traders live every business day, every trading day to the same time. And doesn't matter if you are a retail client or professional client, wherever you are, everybody gets the same spreads. For example, DAX 30 Eurodollar, typically a spread of just 0.8 pips or points during main trading hours without additional commission. Check it out, for example, on admiralmarkets.com. But there's not only admiralmarkets.com, One World Global Offers. We are a big international Forex and CFD broker, a global player. So if you like to find out where we are active with our legal entities, go on our webpage and you can find and read about more there. Enough from my side. Now it's time for our day trader of the day. Good morning, good day, Paul. What's your view to the markets today?
Good morning, Jens. Good morning, everybody. Thank you for the introduction. I hope you can all hear my voice. I hope you can all see my screens. Thank you once again, Jens, for that, for the introduction for Tuesday, the 30th of October. So it's lovely to be here to chat to you. We've got a very busy week this week, ladies and gentlemen. Okay, there's lots of fundamental news that's going to be coming out. We've got quite a bit of Euro news and sort of Germany and Italian relative news this morning. We've also got some sort of Bank of Japan rate decisions tomorrow. Same for the UK on Thursday. I think we've got some sort of Aussie CPI, Euro CPI tomorrow, and of course on Friday we have NFP. So there's plenty of news items coming out this week. Lots for us to digest, lots for us to sort of move and shift markets. So we want to keep on top of what's going on. We want to remain sort of nimble and adaptable to the sort of the shifting sands that we'll see this week. Of course, also, what we've had is yesterday we've had Angela Merkel sort of stepping down as the leader of her political party and saying that she won't run for re-election in 2021. And it's kind of it's kind of an interesting development, and maybe we'll touch upon that a little bit more when we look at sort of the Euro and the DAX in a moment or two. But I've got quite a lot of charts for us to get through today, and there's lots for us to have a look at. Okay, and we'll cover that. Here we go. Here's the first one, as always. Okay, dollar index weekly chart. For those of you joining us for our first session who may be new to trading, okay, my charts are very simple: green bullish candles, red bearish candles, a 20 simple moving average, a red 50 simple moving average, and a green 200 period moving average. And then I'll just draw in levels of support and resistance and particular patterns or trend lines that seem relevant. So as I said, here we go. Here's the dollar index, the weekly chart. We talked about this last week about how we've had a sort of dollar has been twisting and turning over the last couple of months, but over there in the last week or so, we've really had some indications of that dollar strength. Okay, we can see there that we're well and truly above 95 and holding above. We're actually way up above 96 now. Okay, and I'll be interested to see if we get to sort of break that recent high around about the 96.85 level. That's what we'll be keeping an eye on. But that just gives us an indication dollar is strength. So of course we want to look at, well, how is that affecting the other FX currencies? So we just hold that in mind. Dollar's strong. Dollar's in my own strength matrix, that dollar's the strongest of the pack at the moment, and so that will always have an impact upon how I particularly like to look at some of the currencies. So if we look at dollar index, and that gives us our quick heads up, then we start to have a look at one of our next big sort of trading patterns, which of course is euro dollar. Right, lots of very popular trading instrument with Admiral Markets clients. Okay. And here we have, here's the weekly chart. If you're new to trading, okay, I appreciate we have a broad spectrum of experience in the room. If you're new to trading, the sort of, the dollar index is how the dollar is compared to a basket of currencies, of which about the euro makes up around about 57–58% of it. So it's not unusual for the euro dollar chart to be inversely correlated very, very well with the dollar index chart. So as we've seen the dollar index chart, rising to recent highs, well, it's no surprise to see that the euro dollar has been doing the exact opposite. It's actually been falling back. If you remember a couple of weeks back, we talked about, we were looking at it holding here around about that 115 level. If I go down to the daily chart, and we can see that it was holding a little bit on there, but as soon as it couldn't break above that the daily 50 period moving average, we were going to reject it, and we've rolled down quite nicely. And now I'd be sort of looking for us to, here we are in that sort of 113.50, 113 down to even sort of that kind of 50 pip sort of range there between about 113 and 113.50. I'm going to be looking to see how price reacts here. Okay, I think some of that will have an impact from the news that's been coming out this morning. Some of it will have an impact from, of course, the NFP at the end of this week. So I'll be watching that, okay, as a sort of as a swing trader, okay. I'm just watching to see how that price reacts there at the moment on the kind of the euro dollar. I don't have a trade right this moment. I'm just watching to see how it sort of how it reacts this morning, okay. It's you can see that's a very nice downtrend there in its way, but I sort of need to see maybe a little bit of a sort of a pop north for it to effectively roll over and give me sort of range and distance, be able to take a trade down to attack the recent support levels at about 113.40. So I'll just be adding that to your watch list. Okay, just keep an eye on the euro dollar, but we can clearly see there that euro is weak, dollar is king, dollar is top of the hill. And that story plays out against against the pound, against the dollar. I know that we have people here every week who like to look at pound against the dollar. This is the weekly chart here. Okay, so I was saying that in the same way that the dollar has been the sort of the king of the hill, over the last few weeks we've seen sterling sort of plummet to the bottom of the rankings in terms of it's been the weakest currency against against its sort of major other G7 players, and that has an impact. Okay, people, it's all driven by. So not surprisingly, it's driven by Brexit and also driven by Theresa May, whether she'll survive another week or so in the job, and that has an impact upon sterling. For weeks now, we're talking about this lovely weekly flag pattern. So for those of you who join us for the Mastering the 4Ms of Trading webinar every Monday afternoon at 4 o'clock London time, the last week so we've been covering patterns. One of them we were talking about was the flag pattern. We can see it's a continuation pattern. And I talked about, we've here on this session, we've talked about how we've had, real great bearish flag pattern. I like to see a flag pattern be completed by sort of, rejection candles, which is what we had here, and we just fell away nicely. And that flag pattern on the weekly chart has well and truly sort of played, and now we're looking for that price to sort of go down to around about that 127 area. That's what I'm looking for. On the daily chart, what gave us an earlier sort of sign to get into that trade was we had here this daily key reversal candle. It's another sort of price action signal that we've covered in the Mastering the 4Ms webinar. We have the trade there right down from about 32.40, and we actually sort of stepped aside around about 29.70. but as you can see, the trade has continued nicely and continues to do so. And if you're still short and pound against dollar, I'd still be looking at, hanging on towards around about that 127 area. Okay, yes, we do have the Bank of England rate decision on Thursday, but I don't think many people are expecting anything revolutionary out of that. Okay, and I don't think there'll be anything there to really sort of change the landscape. So we would still be short sterling, against the dollar. This is the trade-off. I talk every week in the Mastering the 4Ms is that I'm trying to buy strength and sell weakness. The dollar's the strongest, sterling's the weakest. So I'm going to want to be a shorter of pound against dollar as it provides me opportunities. And as you see, it's sort of that's actually a lovely sort of trend there on the 4-hour chart. Every time it's come back up to give us rejection candles, it's given us an opportunity to sort of rejoin that trend as it moves down further nicely. So we've had a little look at there. We can have a little look at euro sterling. Okay, just to sort of we always have a little bit of a look. It's that just all that does is just confirms the sterling weakness story. Okay, we talked a couple of weeks back about, I actually thought once we'd hit 90 and we sort of rolled over, I thought we'd probably sort of just knock around about the 88, 89 area, okay, as sort of because of indecision, but actually that 87.50 area, which you heard me talking a lot about earlier in the year, still kind of a major player. Price comes down to it and it bounces, and what we've seen here is, even though the euro isn't particularly well loved at the moment, that's giving an indication of euro strength, sterling weakness. The sterling is the whipping boy across the board at the moment. All right, that's and that's what we want to do. We want to find out where's the strongest currencies, where's the weakest, and we want to trade in line with that, because that's where we're looking to sort of let's say surf the biggest waves. We don't want to be fighting that. Okay, if you fight the biggest waves, you're only going to get crashed against the rocks. We just want to know where are those biggest waves happening, so we can get on board and actually surf them. So that kind of euro sterling story that leads us into having a little chat about the DAX. Okay, another very popular trading product here for Admiral Markets. Here we are on the weekly chart. So once again, yesterday, okay, in the Mastering the 4Ms webinar, we talked about head and shoulders patterns, and we had a little look at this. This is the DAX weekly chart here, and we can see there's a head and shoulders pattern here that has been building for 10 months or so, which has finally kind of cracked and sort of driven lower over the last couple of weeks and months. And that's what we like to see, big patterns on big weekly charts. Yes, they take a long time to create and flow, but sort of the bigger the higher the time frame, the more validity they tend to have. So how do we look at that in terms of trades for today? What I'm interested in is that we broke that kind of weekly 200 period moving average. We've gone down and held beneath it, and actually what we're looking at here is it's basically holding around there, okay, and just underneath that level. If I go down to the 4-hour chart, this is what interests me. Is that even though we've had a lovely downtrend, we're on in a I call that a bearish trend, okay, quite happily. What we have here, okay, is we have a really very nice 4-hour double bottom pattern, okay, which formed towards the end of last week. Really nice 4-hour double bottom pattern. That's one of the patterns we covered yesterday, and even yesterday with the announcement from Merkel, yes, we did have a sell-off in DAX. But actually, all it didn't push to new lows, okay? It didn't push to new lows. It actually created ourselves a higher low here. We also had the 20-period moving average starting to sort of turn around and move. And yes, the price action is a little bit scruffy, for want of a better technical term there at the moment. But I'd be keeping an eye on that, because I think the bear trend is in place. But what will happen is that my view is that I think if the DAX can pop above that about 11,450 level, I think we might get a pop up to around 11,750. Okay, and then I'd be looking to sort of then see if there are bearish reversal patterns there. That would then give me an opportunity to take a short trade back down to sort of to the 11,000 area. So I was just surprised that Merkel has she said she's pretty much signaling the end of her reign. And yes, we did have a sell-off, but it wasn't as pronounced as people thought it might be. Okay, and I'll just be keeping an eye on that. I think break above that 11,450 gives you a very short-term trading idea. Okay, up to that sort of block around about 11,700, 11,800. and then I'll be looking for bearish reversal signals for us to see, you know, the dominant trend re-exert itself, and maybe another drive back down towards the 11,000 level. And part of that is, you know, is linked to, you know, what we're seeing in the other sort of major currencies, the major indices. So, you know, here we have the sort of the Dow. Okay, it's not really a classical double top. Okay, but I think most people could see that invariably, you know, once we got to those recent highs, we rolled over and, you know, and we fell away. And we talked about that quite extensively about 2 weeks ago. Now we're looking at, okay, well, you know, we're beneath that daily 200 there at the moment. Okay, price has just moved down nicely. If I look at here, just sorry, once again on the weekly, we look at that just as an indication of, you know, where we are. You know, last week we closed beneath the weekly 50 period moving average there, which we've not actually done, really since, you know, back here in sort of, you know, back here at the start of 2016. So, but, you know, for almost like 2.5 years, we have happily sort of stayed above that 50 period moving average. Okay, and I think if we continue to stay beneath that, that is to me, that is kind of let's say a good signal of what we might be seeing coming in the future, which could be sort of a much closer move down, maybe even an opportunity to get back down towards the sort of 20,000 area, the weekly 200. So that would be a sort of a longer term, bigger trade, but I think that, you know, perhaps we could see that. And so I'm interested in how those indexes are operating at the moment. In the same way of the DAX. Actually, what I'd like to see the Dow do, I'd like to see the Dow actually sort of have a bit of a rally back up to its daily 200 area, around about 25,000, 25,100, and then once again, will there be sort of bearish reversal signals there, the kind of that we've been covering on the Master and the 4Ms webinars, sort of pin bars, engulfing candles, key reversal candles, momentum reversal candles, that would give us the opportunity to effectively sort of take a shorter position further down, back down to sort of, you know, those lows of you know, sort of earlier this year, back down towards around about the 24,000 level. So add that to your watch list. Let's watch how that plays out with the news in place that comes this week. That's you know, the same kind of pretty much story for the vast majority of those American indexes. If I, you know, very quickly, you know, it's a similar story. Okay, S&P double top. Okay, double top on the daily chart before we fell down, and I think that, you know, once again we might have a little pop up there. I thought 2600 would be a significant area, and I'd like to see us maybe pop up, okay, and then sort of trade back down towards that 2600 level. That's what I'll be looking at. There's not a trade there on it today, but as I said, you know, later on for the American session, let's see if we can get a pop up to around about 2720. Then that would give us an opportunity for a trade down towards that sort of 2600 level. The Nasdaq is the same. Okay, Nasdaq on the weekly chart, okay, is that you know, we have broken that trend line. Okay, that weekly trend line. We have also sort of, you know, closed beneath the weekly 50 period moving average, which, you know, we haven't really done since, you know, back in sort of summer of 2016. Okay, so we've had over 2 years above that weekly 50. So now we've got to see, you know, will there be an opportunity for us to sort of, you know, is it going to come back? Is it going to properly kiss that trend line goodbye before dropping down to maybe sort of 5,400? That would be the kind of real sort of bearish pattern. Maybe it'll come down and sort of pop up, so it creates a maybe come down and then create you know, a bigger head and shoulders pattern here, where we'd have the, let's get my cursor, where we have the left shoulder here, the head here, and then maybe a lower right shoulder before it moves its way down to sort of, as I say, that kind of 5,400 zone. So the bigger picture, there's a lot to play for here. Okay, there's a lot to sort of keep an eye on. It'll give us some opportunities. And I'll just quickly finish with gold. I know a lot of people trade gold, especially when they're starting to see you know, maybe say worrying signs in the equity indexes. Then gold starts to take on its sort of interesting spot. And if we look here, this is the daily chart on gold. Okay, so we've had a, you know, a good bounce. We had a, you know, a good sort of consolidation. We broke out of it. I talked about how it's having a small little sort of long trade. But if you remember a couple of weeks ago, I said that you know, my concerns were that, you know, we had this the weekly 200 period moving average here around about that sort of 1230, 1235 area. Last couple of times price has been there, it's reacted. And actually what we can see is, you know, once again, we've pushed up there, but on a weekly basis, it's been unable to close. Okay, it's been unable to close above that, let's call it 1235 level, the weekly 200. And, you know, what I'd need to see is us get above and close above and hold that before we see a longer term move, maybe up to the sort of weekly 50 at around about 12.75. On a daily basis, we've pushed up, and I think actually what we'll do is I suspect we'll actually probably sort of, short on the shorter time frames, we'll probably sort of drift our way back down to around about that 12.11 area. So there you go, Jens. I know it's pretty fast and furious, a lot to cover because we've got lots going on this week. But if we have time for a question, I'll take it. Otherwise, I'll look forward to seeing everybody next Tuesday. Well, I think Jens may have just been called away, so I'll just do it.
I just forgot to push the button for my microphone, so that's my mistake. Now I'm here. So
we've all done it. We've all done it. Yeah.
Thanks to Paul. Tomorrow's another day, 5 days a week, 5 different trainers. And if you'd like to see and watch that again in a couple of hours, it will be available on our YouTube channel. Just go to youtube.com/AdmiralMarketsFX. Thanks to Paul. All the time, best trades and greetings from Berlin office. Bye-bye.